Now, what's up, guys? Yesterday we just got officially the interest rate decision made by the SA Reserve Bank Governor Mr. Lesetja Kganyago, right? And as soon as we notice that interest rates remain unchanged at 7.5%, and this, he said, is simply because of the uncertainties that is around, or that is surrounding the world as a whole. He said there are trade tensions, the countries are fighting against each other, and this brings a lot of uncertainties because you never know what will happen tomorrow. I have seen that a lot of people, some investors, even myself, I was expecting of course, maybe a 0.25% interest rate decrease, or a 25 basis point interest rate decrease, but that's not what we saw, right? Which is what the Fed would usually base their decision on. On Wednesday, it came at 3.2%, so it never changed. It remained at 3.2%, and you will know that as soon as the SA Reserve Bank's target for inflation is between 3 to 6%. When you look only into this, I think a drop was supposed to come, right? They should have dropped interest rates, right? But that's not what it happened because of the uncertainties, like what he said, are surrounding our economy, or our country, or the world as a whole. I mean, there are some tensions between US and China, US and Mexico, US and Canada, and US and us. We cannot leave ourselves out of the equation because yesterday, the video I did, we were talking about the latest sentiment that Donald Trump, or President of the United States Donald Trump, has when he thinks about us. Things have not changed. There's no progress that has been made in terms of us maybe mending the relationship with, or both countries rather, us and the US, mending the relationship so that things can go smooth. The way he commented, you can see that it's not yet business as usual. There's no deal, there's no negotiations, there's nothing in terms of progress that probably has been done. He still stands by what he said when he wrote us that sanction. So because of all these uncertainties, you will never know what will happen. Yes, as consumers wanted interest rates to drop. I mean, you know that the primary job of the Reserve Bank is to play an important role in terms of maintaining the stability of our economy, which they do this with caution, right? They are very cautious of how they do this, and because of the uncertainties that they are seeing in the world as a whole, not just in South Africa, they fear that if they drop interest rates, obviously inflation might spike due to the tensions that is arising, or that is around the world, right? One of the previous videos before this, I think 3 weeks back, he came out and said, look, South Africa needs to have more buffers, needs to have more savings, because these uncertainties, you never know what will happen tomorrow. So I know we wanted these interest rates to drop, but because of the uncertainties that might end up leading inflation to spike, are the ones that made the SA Reserve Bank to stay at 7.5%. I mean, can you imagine if, of course, there are some restrictions, or the tension is to escalate where South Africa starts retaliating to the United States of America by restricting some of the, or by imposing tariffs onto the exports that come from the United States of America. It's going to make or cause a huge demand into those exports, or into those products that we receive from the United States of America, because they won't be bringing, US won't be bringing them that much into South Africa, therefore making those products to rise in terms of price, because the demand will be high and there won't be enough supply. So it is important that this gets to be also weighed on their interest rates, or on the SA Reserve Bank's interest rates decision, which is why they decided to keep it where it was previous time, and this is at 7.5%. You will know that interest rates, ever since they started cutting these interest rates, they've only cut it by 0.75%. This is also from the obviously 8.25%, which was the maximum that the SA Reserve Bank went to try to cap inflation, which was into our country, right? I mean, this current 7.5% interest rate decision by the SA Reserve Bank, many of you will know by now that this is not what us as consumers get when you go borrow money from the bank, but this is the amount of interest rate that the banks will get when they go borrow money from the SA Reserve Bank, because SA Reserve Bank, it's where banks go borrow money, and this is the interest rate that they will have to pay to the Reserve Bank when they borrow money, right? But for us, after yesterday's decision, the prime lending rate to us as the consumers, you and me, it's at 11%, right? Which this is important for us to obviously know, and hopefully things get better with time. So as long as there are uncertainties, I don't think we'll get to see, even if they are to drop interest rates, it won't be as aggressive. It won't be that aggressive, because we need to be cautious of what's happening in the world, right? It's not just about what's happening in South Africa. Yes, inflation is down 3.2% within the bracket of the SA Reserve Bank of between 3 and 6%, but what's happening around the world, the tensions, if there are still tensions, then they are they still uncertainties, and with uncertainties, they need to be cautious when they adjust, increase, or when they decide to increase or decrease interest rates in our country. Otherwise, with all that, just thought I'd give you this quick update. Tell me what you think about this. Don't forget to like, share, subscribe, hit that notification bell, so that at least you get notified by YouTube every time I drop a new content. I will see you on the next one, and God bless you all.
For now, inflation appears contained. In terms of the outlook, the current forecast had more moving parts than usual, including a reweighting of the Consumer Price Index by Statistics South Africa and the proposed value-added tax increases announced in the budget. We also adjusted assumptions such as the oil price to reflect shifts in the global markets. The overall result of these changes is a marginally lower inflation outlook, with headline now projected at 3.6% this year and 4.5% next year. This is mainly due to the better fuel price projections. It also reflects a more benign path for administered prices, given the lower electricity tariffs announced by NERSA in February. These factors offset pressure from the proposed value-added tax increases, which we think will add about 0.2 percentage points to headline inflation. We see risks to this forecast on both the upside and the downside, with the balance of risks in the medium term skewed to the upside. The world economy is experiencing extreme levels of uncertainty. Trade tensions have escalated, and long-standing geopolitical relationships are shifting abruptly. In these circumstances, the global economic outlook is unpredictable. Germany has set out plans for large investments in security and infrastructure, which are likely to lift European growth. Meanwhile, China has announced new stimulus measures to bolster demand. In the United States, economic sentiment is volatile.